Just like that, the federal election's over, and wow, what an upset. In today's video, I want to cover off, now that the election's over, the implications this is going to have for the property market, the share market and investors in general. As we know by now, the Liberals, the coalition, have won over the Labor government, and what an upset it was. One of my favourite moments from the weekend was Sportsbet actually paying out to anyone that had voted Labor. They paid out early. They were that confident that Labor were going to win. They were going off the opinion polls, and off the course of the betting, they were basically admitted defeat and paid out to Labor. Obviously, this was a huge mistake and cost Sportsbet quite a lot of money, but an interesting little side note to this conversation. But this morning we woke up, the Liberals had won the election and are in power and retained power for the third election in a row. And this is a real positive I see for the investment market, both in regards to property and the stock market. Essentially, in regards to property, the Labor government were proposing to scrap negative gearing. So that was to get rid of a lot of the tax advantages that property investors did have. And they were also looking to reduce the capital gains discount when people sold property. So this was a big one for me. They were reducing the discount from a 50% discount for properties held longer than 12 months down to a 25% discount. This really took some of the prestige out of property investing. And so fortunate Labor hasn't got in. Those policies won't see the light of day, so we're not going to see any reforms on negative gearing, and we're not going to see any changes to the capital gains discount in regards to property. Essentially, property investors now have another 3 years of relative stability in the market, and especially in relation to government policy. So we're not going to see any major changes in policies in the next 3 years. So a lot of investors were uncertain at the moment, and they were waiting to see what was going to happen with these reforms if Labor did get in. I think a lot of people were sitting on the sidelines waiting until negative gearing did actually get scrapped and to see if the market dipped, and then we're planning on buying in on that dip. Now this isn't going to happen. We've got, like I said, a lot more certainty moving into the next 3 years, that I think investors will start entering the market now and getting in on the market now, especially as we do have really good returns on offer, especially in some of the regional markets around Australia. In Cairns in particular, we've got some really strong cash flow investments available for investors, and I do feel confident that we'll see those investors really starting to enter the market hard. On this same note, Labor proposed a lot of big changes to shares and ownership of shares, especially targeted at self-funded retirees and the franking credits that they do get, as they're not paying tax but are able to claim those franking credits back, essentially giving them a cash return at the end of the financial year. Labor was really going to change how that was structured. Obviously, with the Liberals staying in power, this isn't going to change anymore, and we really saw the stock market react positively to this news this morning. So as I'm filming this video, there were some real big winners on the stock market this morning, and they were mainly shares that were known for their dividends. So we've got the Westpac Bank, at time of filming this, was up 7.99%. So that really shows that investors have come back into the market with confidence. ANZ's up 6.5%, Wilson Asset Management, WAM's up 5.8%, and the REA Group, which is responsible for realestate.com.au, is up 5%. So we've really seen investors move back into the market quickly this morning and seen some really good growth in those stocks that are known for their dividends. So that's really showing just how much people were sitting back on the sidelines waiting to see what happened with this election, how that fear of the changes to the franking credits, also the fear of the capital gains tax, those implications were also going to implement the stock market. That's all been basically canned now that Labor isn't in power and Liberals will stay in. And like I say, the stock market has reacted quite amazingly this morning, with many stocks up 6, 7, 8%, which is sort of unheard of with blue chip investing, unless there's big news for that individual company. But this is across the market. We've really seen these 5, 6% gains on those high dividend paying stocks. So really exciting times if you are a property investor, if you're a stock market investor, with the Liberals staying in power. Just that certainty that we now have moving into the next 3 years. As always, guys, thanks for tuning in. If you have made it to the end of the video, thank you very much. Make sure you hit that like button if you have enjoyed this. And if you want to see future videos, I do make 2 to 3 videos a week, so make sure you subscribe to keep up to date. Once again, exciting news for those that were supporting Liberal, or like I say, for property investors and share investors. This really was a great outcome from the election, as we now do have that stability for another 3 years.